Hey, it's Justin Harvey. Thanks for tuning into the Anesthesia and Pain Management Success podcast. With APM Success, we take a close look at important topics pertaining to business, practice management, personal finance, and careers for anesthesiologists and pain management physicians. We work hard to take your critical questions straight to the experts. Thanks for listening. Hello and welcome to episode 202 of APM Success. Today, coming at you solo, wanting to tackle a topic for business owners, specifically physicians who are practice owners and who have kids and want to integrate their kids in the family business, perhaps teach them the value of a dollar at the same time. I have jokingly said in the past, if there's anybody out there that has done a good job of raising their kids to appreciate the value of a dollar, please reach out to me because I want to do a series of discussions on how to do that and how to not raise a bunch of spoiled brats who become not good humans. Today's discussion is the beginning of that dialogue. So if you make a significant income, if you're a business owner, there's a lot of complexity and opportunity that goes into that circumstance. I want to look at a very, very narrow topic today having to do with employing your kids in your business. So the IRS creates opportunity for business owners who are interested in doing this. There are a lot of benefits in terms of decreased taxes to your household because of the way that tax rates work and the way that the marginal tax rates for your kids, in this case, work when you shift income from the primary earner, who will say for our purposes makes $1 million a year, 500,000 from W-2 income, 500,000 from profit distributions from the business. If that's you, and this is the composition of your income, and you have a couple kids who are of age that they may want to start working and maybe working in the family business, doing some clerical tasks or something, then what you're doing is you're shifting income from the highest tax rate of 37% down to your kids' tax rate, which starts at 0%. Your children are going to have a 0% federal tax rate up to about $12,000, $13,000 per year. And the net difference, 37% at the top rate at the Fed level, 37% times $12,000, that's over $4,000 a year. So if you have two kids and you're paying each of them 12 or 13 grand, you're reducing 25,000 times 37% in terms of your federal income tax burden to your household. So this is a really useful way to shift income to kids that are going to pay a lot less taxes. One of the things that you have to do if you're going to do this is come up with tasks for your kids to be able to handle. And we always want to do this with an eye towards keeping the IRS happy in the event of an audit. So this always needs to be done by the books. You can't just pay your kids and not have them do any work. You need to have them participate either in your office, doing some filing or organizing things or web admin or tech stuff or managing social media. This is a great thing for kids to do. If you're one of those boomers out there who's like, I don't really want to get into the whole social media thing. But maybe your kids who are more conversant in how to do that, they may be a good resource there. I would recommend keeping a formal job description to keep everything above board. And you also need to be paying a market for the efforts of your kids. So depending on what they're doing, this varies depending on job description, geography, the age of your kid, but you've got to keep it reasonable to avoid IRS scrutiny. Obviously, you want to work closely with a CPA who's going to be preparing and filing your taxes, and they're going to be signing off on this. So you don't want to do anything that they don't suggest is kosher. And this is actually a good time for me to make a disclaimer. Anytime you're making detailed tax decisions, like what I'm talking about today, I'm just bringing you ideas and hopefully educating you a bit on an important principle of shifting income within your household to reduce your overall tax burden. Work closely with your CPA and your bookkeeper to determine the best way to do this in your circumstances. This is not advice for you, so don't consider it as such. In some circumstances, depending on how your business is set up, you may also be able to circumvent payroll taxes. So if you're a child under age 18 in a parent-owned business, that could be another $1,900 of savings on that wage of $12,000 to $13,000. So there's just savings on savings on savings when you shift income from somebody who's making $1 million to your kid who's not making anything. And one of the really nice things about this, and I would call this perhaps the largest benefit that receives the least billing and promotion, is you're giving your kid, in addition to helping them learn how to work and having some skills there, you're giving your kid the gift of compounding. And I'm going to share something kind of mind-boggling with you. At least it boggled my mind, even as the financial advisor in the room. If you work for 6 years, from age 12 to age 18, actually, I guess that would be 7 years technically. If you start at age 12 and you get paid, we'll call it $6,000 a year. This is a summer job, a few hours a week, just enough to clear that amount of money. And you save all of this in a Roth IRA. A Roth IRA is a tax-free account. And you invest. You can't put money in a Roth unless you have some earned income. So when you're paying your kid, you're enabling them to use this vehicle, the tax-free Roth IRA, to begin to grow assets. When you stash money, $6,000 a year for the first 7 years here in our example, after 7 years at age 18, you end up with just over $50,000, 50,000 of tax-free money. If you then, as an 18-year-old, totally forget that you have this account, stick your head in the sand for the next 40 years, at age 65, with a little bit of a compounding tailwind, I'm assuming 7% per year, this essentially would be an equity-focused allocation, but that's a conservative assumption over the long term. At age 65, this turns into $1.2 million of tax-free money. $1.2 million. Just saving $6,000, $6,000, $6,000, $6,000, $6,000, $6,000, $6,000 for those summers from age 12 to 18. Roth IRA, 7% a year, $1.2 million at age 65, with no addition of capital between age 18 and 65. That is a really powerful thing and a beautiful gift to give your kids. And it really doesn't require that much. It's just a little bit of compensation during the summers to enable them to make the contribution. So you're reducing your household tax burden. You're shifting income to your kids. They're paying little, if any, federal income tax. And same with the states vary. So again, talk to your CPA about this. But this is a really, really powerful tool. If you haven't considered paying your kids in your practice, and you have kids of age that they can do some work, you should talk to your CPA about this. I would also note there are certain circumstances in which even younger kids, age 4, 5, 6, 7, I've heard stories where kids are paid for quote unquote modeling because I'm going to take their picture and put it on my website. Is that a good idea? I'm not going to opine on that. I would say, imagine you're talking to an IRS examiner and you're trying to explain what you did. Do you feel good about it? Or do you feel not that good about it? That's one test you could apply. Also, talking to your CPA and soliciting their input. Your CPA is going to be on the hook for having to work with you to talk to the IRS in the event of an audit. As we talked about in prior episodes, they're ramping up enforcement and things like this, areas of scrutiny for business owners. This is going to likely be one of those areas. So make sure that any decisions you're making in this department, in order to lower your tax burden, are defensible, well-documented, and in accordance with the advice of your tax professional. Having said all that, that's a long disclaimer. The same year tax savings can be between $4,000 and $5,000 for you in terms of the household tax burden. And what you're giving your kid at age 65, that $1.2 million of tax-free money, that's really powerful. So thanks for listening. If this is something you're interested in learning more about or maybe discussing in your circumstances how this may apply, please reach out. Justin at apm-wealth.com would be glad to speak with you about what this might look like. At the end of the day, this is really going to be the tax preparer who is going to need to be looking closely at your business operations and make sure that things are properly documented to be able to closely advise you on the right way to do this, but there's definitely opportunity. As always, thanks for tuning in. Talk to you next week. If you liked what you heard this week, head on over to apmsuccess.com. where you can find more content and free resources to help you build a successful career in anesthesia and pain management. If you wanted to leave a review in iTunes, I'd also really appreciate it. Thanks for using some of your valuable time to join me today on APM Success.